A week ago, everyone was freaking out, right? SVB, Friday, everyone was freaking out. And I put on the Bitcoin orange pants. I put on my Genesis block socks. And I said, look what it says, right? Chancellor on the brink of second bailout for banks. Bailouts are good for Bitcoin and for crypto and sure. And we saw it in 2020, right? We printed half of all the money that's existed in the history of our republic, 247 years, half of it in an 18-month period. So what should have happened? Well, gold should have doubled, but it didn't. Why not? Well, because JP Morgan's been spoofing the price, and that's a whole nother story for another day. But the other asset did double. It almost perfectly doubled from 10 to 20,000, exactly as you would expect. That was Bitcoin. I think there are so many things to talk about here. One is, this crisis, and people are calling it a crisis, is very different than the global financial crisis. And there's the core reason for that is the type of assets on the bank balance sheet. So if you think about a bank balance sheet, there's the green, right? So St. Paddy's Day, you got the green side, assets, things that derive value for the bank. Then there are the liabilities, the red. And the liabilities are actually our assets, right? We put our money in a bank and it becomes their money. It's one of the things that people don't really think about. It's no longer your money, it's theirs. And you have an IOU that is money good most of the time, but those liabilities. And in a perfect world, the assets, which are the loans that they make or the investments that they make, accrete value, and the green becomes bigger than the red, and it leaves you with some gold, right? Pot of gold. And the gold is the equity of the bank. And in a normal functioning system, that gold grows as the green expands and people can get access to their deposits. So if you think about what a bank does, it takes the deposits of everybody, the community puts their deposits in, and then it takes those deposits and makes loans. And those loans could be the form of a mortgage. We've all seen It's a Wonderful Life, where it's about the building a loan and building other people's homes. It could be loans to businesses so they can, buy stuff or build products. But it can also be investments in yielding assets like bonds. So if you go back to previous crises, okay? So there was a crisis in 1907 called the Knickerbocker Trust crisis. How did that happen? What happened there? Well, it's kind of funny. JP Morgan was running the bank, the big bank, JP Morgan, and there was this law passed that allowed trusts to compete. And JP was famously quoted as saying, I like a little competition. And unfortunately, Knickerbocker had become big and it was siphoning deposits out of JP Morgan. So he did what any, enterprising bank owner would do. He spread a rumor about Knickerbocker Trust that they didn't have enough assets. And so we've all seen the picture of the bank run. Like if you go to Wikipedia and look up bank run, there's this picture of the men in their suits and ties and the women in their dresses, and they're all in the umbrellas and they're running to Knickerbocker Trust. And the bank run happened and Knickerbocker Trust went out of business. And of course, JP Morgan bought it for pennies on the dollar and became superpower. So that was one kind of bank run. Then we had 1987 problem where you had bad people doing bad stuff, like literally stealing money. So that was bad. And if you steal the assets, and if your assets, the green, shrink to smaller than the red, and people then try to take their money out, there's no gold, right? Gold disappears. So Charles Keating and all those guys, they did bad stuff and people went to jail. Well, then we had the global financial crisis. Well, what was the global financial crisis? Well, the green was not so green. They made loans to, imaginary people and people's third homes and interest-only loans and all kinds of crazy stuff that was never going to get paid back. And so again, the gold disappeared and it had to be a bailout, which is why Bitcoin was born, right? I mean, the Genesis block is a picture of the Financial Times, chancellor on the brink of the second bailout for banks. And it's important that that day was the birth of Bitcoin, because it's not like it was created that day. It had been worked on during the global financial crisis. It's actually been worked on for 20 years before that, cryptography and trying to solve the double spend problem. But it was critically important that it was on that day, because it was basically saying that when a banking crisis happens, when there's a loss of confidence in a banking system, basically you vaporize the gold, right? You vaporize the value, the money at the base layer of the system. And therefore the currency, the credit, because the only money in the world, Ash, and you and I have talked about this, is gold, right? Money is an asset that exists in the absence of a liability. That's gold for 5,000 years. Now, I'll argue it's Bitcoin for the next 5,000, but let's just say it's gold. And everything else is credit. JP Morgan famously said, gold is money, everything else is just credit or debt. And so what happens is when you lose confidence, then all of a sudden the value dissipates and you have to devalue the currency by printing more of it, by fiat. And so that fiat fiasco, as I like to call it, my hashtag fiat fiasco, that goes on over and over and over again is when governments that overspend, banks foment that and facilitate that. And then you have to pay the piper and they can't, so they just print more money. And we saw it in 2020, right? We printed half of all the money that's existed in the history of our republic, 247 years, half of it in an 18-month period. So what should have happened? Well, gold should have doubled, but it didn't. Why not? Well, because JP Morgan's been spoofing the price, and that's a whole nother story for another day. But the other asset did double. It almost perfectly doubled from 10 to 20,000, exactly as you would expect. That was Bitcoin. Because Bitcoin, one Bitcoin is one Bitcoin, right? I got the sign behind me that says buy Bitcoin. One Bitcoin is one Bitcoin. But this, I think that's interesting is you're not putting this technology back in the box. You're not going to stop the people from diversifying a portion of their wealth, particularly into Bitcoin. Bitcoin it's digital gold, right? It is a superior store of value. Now, look, I said, I'm going to take full credit for the 30% pump in the last week, for Dawn in my orange pants. But no, reason it's up 30% is because the currency is being devalued again. When the currency is devalued, the price of Bitcoin goes up because we price Bitcoin in dollars. And for the same reason that there's never been a bear market in Turkey, because the lira just goes down and the price of Bitcoin priced in lira goes up, or Venezuelan bolivar, same thing. There's never been a bear market there. So the reason there's a bear market in the US is because we keep thinking that the Fed is actually going to shrink their balance sheet. They just reversed half of all the QT in the last 3 days. Half, 300 billion, the largest increase in their balance sheet in the shortest amount of time in 50 years. So all of this is part and parcel of the technological innovation, the evolution of financial services onto blockchains. Look, every stock, every bond, every currency, every commodity, every piece of art, every collectible car, every case of fine wine, every private business, everything that can be titled will be a token. Not a little round thing. A token is a line on a database in a public ledger on a blockchain. All of it will be tokenized. All of it will trade on blockchains. All of it.